in the next couple days, we're going to get a little bit of chop. We may sell off into it, or, you know, we may start to bounce in anticipation. I know that's not very scientific from your trading teacher, but that's just the nature of markets right now. Range-bound markets are really, really tricky, but, you know, we are kind of starting to dust down on the support. So we could hold, we could break under. We're kind of 50-50. Hey, Aaron. Hey, J-Mare. Hey, Amy. How you doing? What's up, everybody? On the gapper side, there was really nothing that entertaining. This PTI is kind of coming out of range over here. You know, upside gapper life has been super, I'd say, like, not fun. I don't know what the word would be. They just don't got the heat right now on these things, so it's just been a big dud right now. Christy, what's up? TJ, what's going on? On the downside, we got this BBW. We got 55 coming down to 51. Retail's been kind of sucking lately anyway, so I'd add that to the gap down list. There was an Obamacare ruling, I believe, on Friday or Saturday that's kind of knocking down some of these healthcare stocks. You're starting to see a $10 drop on CNC, breaking below that 200-day moving average. This could be something that we'll have on watch list for potential ORB or quick pullback buy, right? You only get two options on a gap down like this. They did reaffirm their outlook, but it may not matter. Johnson & Johnson got the MPC on Friday. We're breaking below this level. When you think about like second day plays, like how do you short something on the second day? The key is, like, watch the low from the previous day. If you build under it, right? If you build under it, then you can go and you may have a second day trade. But what typically happens when people are looking to short on the second day or even long is, like, say like you bounce above and then you take like an ORB pattern like around here, well, then you just have all this support and it doesn't work, right? The key on a second day play is you got to thrust under and then build under. That way you have, right, a no demand zone where you're building your pattern. When you think about patterns, sometimes we get so singular focused on 3 candle, 4 candle sideways, this moving average, blah, blah, blah. We forget the dynamics of what still needs to happen in the structure of the trade, which is supports and resistances on the big picture, and then you build under. So always be just kind of mindful of your levels. Same thing with this THC. That's another healthcare stock. You can put that on the list too. If the market does get dusted today, you know, this TVIX is at a 1 tap, 2 tap, 3 tap, 4 tap. You're right at like kind of a sweet spot where you could break out. You could reasonably see if this thing breaks out, it tap into 60 today. This is not something you ever hold overnight due to the gaps on it. It is a day trading instrument and a damn dangerous one if you hold it too long or you have too much size. So on TVIX, no overnights for me ever. And then you have to watch your size on it. You know, if you're thinking normally a $60 stock, $50 stock, you would buy 500 shares, go 200 shares because the range on it can be so incredible. I will say one thing with the way it was trading on Friday. We saw this in the chat room. It was a little bit frustrating. The upside breakouts on it were actually getting dusted. They were just coming back and stopping out. And then, like, you know, the support plays were the ones that were bouncing. But if you, like, ever bought it high, right, like it would just come dusting down a couple candles. So, like, in something like this, you know, if that kind of range is happening, you want to be scooping it on the dips to support, selling it into the rips. Remember that as traders, like, you can't just draw a squiggly line across a chart and expect to buy and sell because it goes over. I mean, think about just how naive that kind of thinking is. We all get caught in it, right? The overall structure of how this thing has been moving is scoop it up on the dips to support and sell into the high of days. Nothing right now is working if you try to buy high of days. Buying high of day breakouts or flat top breakouts where, you know, you have like big lines of resistance that you bust over. That is a bull market trading tactic that is used in bull markets where the chase is on. So like in bull market trading tactics, right? Say like you're in some small cap stock or some earnings play and you see that type of pattern. In bull markets, people are rushing to get into a stock, right? That's just the structure of how the market is. So you can chase things higher because the momentum actually begets more momentum. Where in bear markets or range market trading, momentum gets sold off, and so you can't chase anything at high of days, basically. So just kind of be mindful of that. I got this TZA on my watch list today. It's been trending really nicely, up 4%. This is the ETF that shorts the IWM, which is the small cap market. Where you talk about TVIX. Put TQQ on your watch list. This is the 3X ETF for the NASDAQ. This one's going to have some juice on it too. If it can break and hold below that. Hey, Dad, what's up, baby? Shopzilla. The Shopzilla actually had earnings out on Friday. It got dusted. It did a little VWAP fizzle down over here for like $6. Guys, learn the VWAP fizzle setup, by the way. Hey, good. MacBook's a good choice. We'll learn the VWAP fizzle setup. You're seeing a lot of these kind of stocks do that midday. Watch the price of oil. What you're starting to see here is just a flag pattern start to develop. This is an ETF that shorts oil on a 2X basis. DWT is the ETF that shorts oil on the 3X basis. So it goes the opposite of oil. So if oil goes down, these go up, right? So oil, if it goes down, say 2-3%, this one will move up 10%. It's got the look. The one thing you'll have to be wary of is that oil typically has news in the midweek. It usually comes at like, one comes at 10:30, the other one comes at 2. So look up on your TC2000 or your Bloomberg economic calendar. Make sure you're not holding into inventory releases. Any type of news release that comes out, they launch them all the time. Hey, we got 50 million barrels in, blah, 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 or this is happening, who knows, right? But just check the news on it. DGAS is starting to creep its way higher. So, right, UGAS is getting smoked. DGAS is going the opposite. You've got a gap fill up here to like kind of 120. Even the top of the range is at 100, so you still have a little bit of upside on this. This is another one that like you can't necessarily buy high. You know, these kind of ETFs, like you got to scoop them up on dips because if you chase them on strength, they just kind of fade off. But before you know it, you know, it'll have moved like $10, $15, right? But you want to be, if you got it on your list, like you want to be scooping everything on the dips and selling into the rips. Most important thing you can really do for your trading right now is to do that. Don't be buying any high of days, and you guys should be good to go. A couple people asked about that JNUG. It's a real short list today. You know, for me, the focus is going to be on TVIX, J&J, a couple of these, you know, these gappers. And then, you know, I'll just be using the ETFs. You know, you could put even like something like a NVIDIA or something on your watch list for this like bear flag right here. The direction of the market is going to really kind of give us the key on what we're supposed to be doing. Market could go either way. We're right in that kind of spot where either the bottom drops off or it holds and you get a little bit of a squeeze. Like you're right on that precipice between, you know, short and long almost, right? It's like an inflection point. So it's very rare you have such an inflection point, but you're right there at that sweet spot on the overall market indices, and so we'll have to be prepared either way. JNUG. Hey, Brett. Yeah, JNUG is tough, man, because, you know, like, so, like, you're just kind of stuck in this range, and, you know, it's like how, I don't know. For me, that one, the Nugget looks actually better than the JNUG. You see how, like, the Nugget's, like, kind of above your MAs and stuff? So the Nugget, which is, like, similar to the NUG, the JNUG, it looks a little bit better right there. So I think you'll have maybe a better release on a technical analysis basis. Because if you got over this, right, you have all this room to maybe 20. So the NUGs has got a little bit more juice to... Remember, these are both decaying instruments, so, you know, historically, they just kind of bleed down to zero anyways. Yeah, we'll have, you know, we'll have a webinar tomorrow, tonight, tomorrow, something like that. So we'll see everybody in there. Should be a fun time. We'll be talking about the 7 deadly sins of trading, the ones that, well, frankly, we mess up on every day. But how do you limit them? How do you profit from them? All that kind of fun stuff. See everybody in there. It's Money Monday. Got to do what we got to do. Let's do this, guys. Everybody ready to have some fun? Ready to make a little money? Cool. Market's bad because all day sneaks off like every day, just sulking into the corner, playing video games randomly. Then we got to chase him down, then he shows up with a shred. So that's when the market's acting a little funky. PTI, my friend. Yeah, I think PTI could have some juice. Faux show. All right, let's go do what we got to do. We got to make a little money. As always, I'll be trading live in the Boom Boom Room.